Good morning. It's Harvey Jackson. In the news, there's a few different things, but the first one is Trump is capitulating again. I'm starting to wonder whether he's even going to have tariffs at all. Is this just a game to get the U.S. population thinking about their own production and producing it for themselves? It's a grand plan if that does work, but man, oh man, a lot of people in the world are not so friendly to him anymore. I don't think he's going to get the calls begging to see him after his presidency if he continues. But so he's flux on. So here the article is that he's cutting the Chinese tariffs substantially in a trade deal. Well, yeah, and this I've been talking about for quite a while. There's no way that they're going to keep it at these values, but yeah, it's just ridiculous when you start to think about it. How many times has he capitulated just on tariffs alone? India is starting to buy palm oil as prices fall below soy oil. There's actually another article following this one here too, but in here we do talk about the values. So crude palm oil is currently being offered at just 1,050 a ton, including cost, insurance, and freight. So to get to India, and the May delivery of the crude oil was around 1,100, and they do buy from multiple sources. They had bought a little wee bit from the U.S., but a majority is bought from other sources as well. Palm oil demand from China and India is expected to rise as prices become competitive in this article. And then when we look at what Susan Shroud had put out, just the soybean oil and the palm oil differential in price, priced in U.S. dollars per ton. So you can see the soybean oil has been increasing, the palm oil is decreasing. I've talked about that as well. When you see palm oil dropping to these values where they did, you're going to see more demand. And so surprise, surprise. That's what I just pointed out. Demand is picking up as the prices of the palm oil is going down. But there's increased use of the palm oil for jet fuel is pretty substantial. Here's a wheat story that I thought I better keep in mind as well. And Karen Brown wrote this, and she's just talking about your stocks to use. You can see over here the stocks to use is quite low. And you've got a few countries, like Russia is expected to grow about the same amount of tons. Ukraine is maybe a little bit lower, and the U.S. planting pace is lower as well. Although Canada might pick up a little wee bit here as well on acres. Now, when all is said and done, there's still an expectation that there's going to be a fairly tight supply of wheat in the world. It's not Here's Mitch Miller on X, he works for DTN. He was just mentioning what to watch out for on the spreads. So a 50% spread premium from wheat to corn provides excellent support. So what he's saying is, as the corn values are and the demand is getting held up pretty decent, it's going to hold up wheat as well. That's not a surprise there. Here's just a graphic of subsoil moisture that came out on Monday as well. I just saw it here today, but when you look at this, there's quite an improvement in soil moisture change, and I think I pointed this out in the maps here as well. You've got this area is actually too wet. And there's going to be probably no planting happening in that area. And we're currently getting snow and cold weather up over there, so they're probably not planting either. So it's going to be a slower week come Monday when we see the planting progress. So just looking at the prices, canola is up 4 to 5. European rapeseed down, so the spread between European rapeseed and canola is narrowing. Soybean oil is slightly up, and palm oil is down still a little wee bit on this graphic here anyway. Crude oil is up $1.23, and the West U.S. Harbor diesel fuel is up. Soybean is up, and the meal is down. And your wheats are a lot of them basically unchanged. Spring wheat, there's maybe a little bit of a leader. And corn is down just a penny. So let's just have a look at this. I have two different graphics here. I've got one price in US dollars, and so this is your July contract. And you can see that we're bordering the same kind of highs that we were before, that we currently made price in US dollars. And the reason I'm showing this, if you understand the whole rationale, everything is bought in U.S. dollars in canola at the ports. So this is just getting to these values that are quite expensive. But when you look at it here, it looks to be the exact same value. Technically, it's still you should be selling right here. Now, if we break out with the tight supplies that I was talking about yesterday, I would definitely still be putting in orders to sell more canola here, just for the fact that we're hitting those technical levels. Here's just your forward curve, and this is just explaining the difference between the May and July contract. So July is substantially higher than your November contract, and I don't know if that gap is going to narrow up as we shift over to May to move into July, because we've only got another just a little bit better than a week before that moves over, and then we'll be into delivery on the May contract. But will we still have this, let's call it close to $30 differential between the two? It's definitely showing that there's a lot of demand on the old crop right now. And if that still continues for a while, it might even push this one lower if there's a huge demand. And like I said, I pointed out that it's going to be a super tight carry out if we continue at our export and our crush pace. So here's your November contract, and that's what I'm saying. We're about $20 behind on just capturing these previous highs that we got to. So there's a bit of a hold and wait. So we're waiting for maybe May to go up more and to drag this one up along with it to be able to capture some potential sales on the November contract. So it's got to do some push here. Here is your European rapeseed, and it's pulled back off of its highs there, and that's allowing this to actually happen here. So you've got this pretty stark drop, but you've got also still $149 differential between European rapeseed and canola priced in Canadian dollars. So ideally, you want to see it down in this range, maybe the $100 to $80 range, and that's giving us probably, if you just think about the $49, if it's all going to canola and European rapeseed doesn't go up, it's still going to be well priced on the global stage, as that crop is. We haven't even planted any, and European rapeseed is going to be into harvest in probably a month and a half. Here we are with soybean oil, trying to approach these previous highs that we made, looking for a breakout to get above that 49 cents or around that 49 and higher, and that might give us some potential for canola to break out as well. So here's your soybean, and it's tracked pretty decently higher. Still a little ways to go to get to those previous highs that it made. Your crude oil futures, nice little leg up here. I'm looking for some sort of range up in here before it, as Trump capitulates and continues to capitulate. This is good for the world economy. New York Harbor Freight, it's come up some as well, but not the same pace as the crude oil. Here's your Canadian dollar. I'm looking for this area right here, above here, and potentially, if it breaks through there, then it's going to get up to your 75, 74, 75 value. If it breaks down, I expect it to break down. This is your hard red spring wheat contract that a few people are talking about. There's very few trades out on there yet, so we'll have to see when the Minneapolis exchange gets traded on Miami, not on the Globex. Whether this one will start taking over, I don't know. We'll have to just keep our eye on that. Spring wheat kind of faltering, and here's your Kansas wheat. This looks like a buy, as it's trying to hit that multiple bottom there. Chicago a little bit more supported. And here's your corn futures, and it's kind of flagged off, pulled back a little bit, but there's probably still some good support there, right? And it's quite a ways down, but there's still good support there on the wheat. And that's all I have for you today.